What's going on, good people? Welcome back to another episode of Trading My Live Account. Today is day number 47. It's August the 15th, 2023. We made some trades today, so let's get into it. First and foremost, let's talk about all of the important levels that we have on the chart today. So we have a lot of zones all the way up and down today's chart, but they all make sense. And all of these zones, except for the lowermost zone down here, everything other than that was a zone that was drawn based on pre-market consolidations, and then I boxed it up and just extended that across the market and used it as a reference point throughout the day. And pretty much all of these zones play a major factor in today's session, so we'll get into that a little bit later. So let's go ahead and get right into it. Let's start off by talking about what happened this morning when the market opened. So let's go ahead and go to 9:30 right here at the top of the chart. So as soon as the market opened, we sold off, created a lower high. So once we had a swing high and a lower high get created, we can then connect those with a trend line, extend that trend line throughout the market, and then use that bear trend line as a reference point to go short from throughout the rest of the day. And that's pretty much what led me to trades 1 and 2. So let's read the notes for those. So I shorted a little bit too early at trade 1, but then I caught the short on the way back down. And you know, sometimes when you're in a very strong downtrend, you got to let the market run its course. So if you're trying to short prices as they're on their way up, it doesn't mean that it can't work, but just understand that you do have a higher chance of momentum actually running through that level before the market actually starts to fall back down again. So one of the things I've learned is that you don't necessarily always want to catch the short move as prices are on their way up, but what you want to do is see prices come back to whatever level you are looking at, and then as they continue to move down away from that level, that's when you catch the short trade. So that's what I was able to do on trade number 2, just catch it on the way down after I got stopped out at trade number 1. So caught it at the top of the zone and then just simply took it back down to the bottom of the zone, which makes sense. Now, this move ran for a little bit longer, and I could have had opportunities to get back in on the next candle after I closed trade 2, but I decided to get in a little bit later at point number 3. And I got in at 3 because after this down move from trade number 2, I saw prices break down below the zone. So I'm like, okay, if we broke back into this zone, we should be coming back down to retest this bottommost level, which had been a strong level of support for a good amount of time leading back into the pre-market. So I assumed that that was going to be the level. So as soon as we broke back into the zone and pulled back up to retest it, I'm like, okay, that's where I should short it at. But looking back on it, what we really did was come back to test the first higher low that got formed coming out of this consolidation zone. So anytime you have what used to be a downtrend and then you have a higher low get formed, if the market comes back to retest that level, don't expect the short selling to continue from that level, because more than likely, if there were any buyers left in the market, that's exactly where they're probably looking to go long, because they feel like they can get the best value from those prices. So you don't want to get in the way of that momentum. Instead, you want to kind of do what I was talking about on trade 2, where you wait for prices to come to that level, and then as they move away, then that's when you want to participate and get back into the short move. Because if you wait for the reaction, you don't have to take that trade as you see the momentum continue, and then you can say, whew, I dodged a bullet on that one. But if you put your order there as prices are coming into that level, then you have to deal with whatever movement is coming after that. And a lot of times, like I experienced on trade 3, that might be a loss that's coming. So always make sure you want to not only have the right idea about where the market is going, but you got to be patient enough to let the market confirm the ideas that you have before you start trading. So after trade 3, we see prices come back up to retest the same level that trades 1 and 2 originated from, and then we pull back down to the bottom of the zone, established a higher low. So once I saw that get formed, I'm like, okay, we are in an uptrend because we bounced off of support from a previous higher low and pushed back up. So I want to trade this higher low as though we were in an uptrend. So I'm looking to go long as prices come back into that support level. And that's what I did on 4, but my break even stop got hit. And this is one of those scenarios where a break even stop really protects you from taking a bad loss, because looking back in retrospect, this was actually a lower high. So if we start from the swing high, we come back, create our first lower high right here. We had a new lower low, lower high right here. So this is LH number 2. Pushed down, we made a new low, and then came back up to make lower high number 3. Now it didn't seem like it because I was more so caught up in this movement from the upside, because I was looking at us bounce off of support. So I'm like, oh, okay, the uptrend is resuming. But there are scenarios where the downtrend spans so much that the pullback can be so intense that it'll almost trick you and make you think that the uptrend is about to resume, when really it's not an uptrend that's about to start. This is just a very deep pullback. So always keep that in mind too. That's one of the biggest things I learned on Trade 4. So luckily that break even stopped preventing me from taking a loss, and I could just learn the lesson without having to lose money. So happy about that. So then we see the downtrend continue after we make that lower high number 3, push all the way back down to what used to be the lowest level of support for today. And then once we push into the zone and we push back up, I expected for us to, once we broke into the zone, to come back, retest the top of it, and then I expected the sell-off to continue. But what I learned right here is that shorting near the lows of the range is not a reliable setup, no matter how appealing it may be. And also going long at the top of the range isn't appealing as well, and we'll talk about that on Trade 10. But right now, let's focus on the short side. And I say you don't really want to short the lows, even though the downtrend might be strong, because there's just so much demand at these levels. Because if you remember what the overall bigger picture is, we're still in a very strong uptrend. So you always got to assume that even when you're in a downtrend, when you get to major levels of support, just expect a wave of buying to come in. Just treat it like you already know the buying is coming in. So that way you already feel tempted. Well, you already feel uneasy about shorting. And then you look at the price action in combination with the supply level, the demand level that you're looking at. And then you can say, oh, okay, you know what? Let me hold off on the short trade right now and see if the selling is going to continue. And I think that's one of the things I learned today that was the most important. Stop trying to jump in front of the market and anticipate what is going to happen, but instead let the reaction happen. And then if you get the reaction that you want, then you can take the trade that you're looking for. And I think that really comes down to the confidence factor. I think I've been having a really good time in the market over these past couple of weeks. And I just came into the market today with a little bit of a big head, thinking that I could do whatever and anything that I did was going to work. Now, you got to remember, like, you might be confident as a trader, but you still got to live in reality and trade what the market is giving you. And don't try and outsmart the market and jump in front of it like, oh, this is what it's about to do. No. You want to let the market show you what it wants to do, and then you just simply trade accordingly. So that's one of the biggest lessons right there on Trade 5. And also, one more thing. When you see these long tail candle wicks occurring near support, you really don't want to get in the way of that momentum that's coming back to the upside. So keep that in mind as well when it comes to trades like trade number 5. So once we actually pushed back into the zone again and came back up to retest it, that was the proper time to short it. And that's actually what I was able to do at trade 6. Now, on trade 6, 7, 8, and 9, if we read the notes, I said these trades all had great entries, but I was stubborn and didn't lock in my profits. Now, on 6, I wouldn't have been able to profit on this trade because this only gave me a 10-point profit, and that's enough to trigger my break even. But I actually moved my break even stop back up, and that's a habit that I've kind of been doing these past 2 days where I've been getting away with it, but it's actually starting to catch up with me now. So I'm starting to realize that I keep my break even stop where it is for a reason, and I need to get back to doing that immediately. So that's the plan for tomorrow. But when we talk about today, I did move that stop up and I had to take a loss. Now 6 really should have just been a break even, which is fine. But when we move back up to 7, we see prices break back into the zone, and I shorted once again, right? Now I had an opportunity to get out as prices came back down towards the 25 level, and that made sense because when I got in towards the 50 level. We were at 35,050. Now I had about a 30-point profit on this trade and still refused to take it, only because I just assumed that prices were coming back down to 35,000. I assumed that because the downtrend had been so strong up until that point that I didn't really think that we would hold up at 25 if 35,000 was 25 points below. I'm like, okay, we're going to come down, test that level real quick, and then we'll see what happens after that. But that goes back to what I always talk about when I say that you can't get too far ahead of the market. You got to trade the level that's in front of you right now. And I think that's where I went wrong on trade 7. I had 30 points of profit and let it come back. So always take what the market is willing to give you. And then if you have ideas about where you think it should go, just wait for that confirmation first. But take the level that's in front of you first and worry about the next one later. And we come back to the same issue on trade number 8, where I shorted right here also. Had an opportunity to get out at the same price point that trade 7 gave me a chance to get out at. Still didn't do it. Let that trade come back to break even. On trade 9, I took the same short trade as I did from trade 8 from the same prices, from the same levels. Also had an opportunity to get out at the same level as trade 7 and trade 8 offered me, but I didn't do it. And on this one, not only did I let it come back to break even, but I also took a little like 10-point loss after that. So that's really not good. And looking back on it, I think this whole sequence just shows me the best of my trading and also the worst of my trading. It shows me the best of my trading because I read the market very well, took great entries that are in line with the trend from pretty good levels and pretty good prices. My entries were great. Now, it was just the management of my exits that really went awry. And I think that's what I need to work on as a trader. That's one of my worst qualities, is getting a little bit too greedy and trying to get it all off of one trade. Like sometimes that's just not how it's going to be. You know, it's better to just nickel and dime your way throughout the session, and then at the end of the day you'll probably end up with $1 instead of trying to get 50 cents here and 50 cents there and then end up with $1. It's better to just kind of take it slow, take it steady, trade after trade, build it up slowly, you know. So I think that's one of my biggest problems, but I think it's, you know, I'm not too down about it because I see where I'm going wrong, and I just think that is one little tweak that I need to make. Just take the profits. So going forward, I think the adjustment would be to come into the market with a mindset of taking my scalp trades first, because I came into today with the mindset of trying to look for larger profit targets based on what I saw in this move. But if I would have came in and had the mindset of taking my 20 to 25 point scalps on every trade that I took, 6 would have been profitable, 7, 8, and 9. So altogether, I would have been able to make 30 plus 20 plus another 20, which would have been 40 points in total. Excuse me, my math is all off. 70 points in total. So I left 70 points on the table, which is not good. It's not a very good thing, because that 70 points would have been able to make up for all of the losses that I took on trades 3, trades 1, and the break even that I had on trade 4, as well as the loss I took on trade 5. So to leave all of those points on the table, it's just not good, but I definitely understand what I need to work on going forward. So then we come back to trade 10. Now trade 10 is actually the opposite of what I was talking about on trade 5. So on trade 5 and trade 3, I said that you don't want to short towards the lows of the move. Well, trade 10 is an example of why you don't want to go long towards the highs of the move. Now, I usually do not go long as prices come back up to retest what used to be a previous zone. I usually never go long during that, because it usually always leads to prices coming back down to the zone that it actually broke out of originally, and then the uptrend resumes. So on trade 10, I didn't go long when it first broke into the zone, even when it made this higher low right here. But because I considered this little small red candle to be a higher low, I went long as prices came back into that level, and I got caught on the false breakout to the upside. So what I'm learning is that there are no exceptions to this rule about not going long towards the, I guess, the support level of what used to be a previous zone. Because I think today I thought this is the one exception where it just makes sense to take this trade. But what I've realized is that there are no exceptions. Even when it just looks so appealing and it seems like this trade is going to work perfectly, it still fakes me out and goes against me. So from this point forward, this type of trade is just out of the question. I won't take it anymore, because I can't even, now that I'm thinking about it, I can't recall any scenarios where this specific trade ever worked for me. So it just doesn't make sense to keep taking that. So lesson learned on trade 10. We got to eliminate that trade from the playbook completely. So then we see the downtrend kind of continue a little bit. And once I saw the false breakout, I'm like, okay, we should be moving down. So once we created this lower high right here, I took our swing high and I took our lower high, connected those with a trend line, and then extended that throughout the market and used it as a reference point to go short on trade number 11. Now, trade number 11, I ran into the same problems that I had on trade 6, 7, 8, and 9, where I took a great entry. I read the market perfectly. I traded from the best possible prices that I could get, but I just didn't exit where I was supposed to. I had more than enough room to get my scalp target on this trade right here on 11, but not only did I let it come back to what should have been my break even stop, but I let it come back to what my regular stop loss would have been. And that right there is just very bad decision making. You know, it's one bad decision to not take profit when it's there. It's a second bad decision to not take profit when you come back to break even. And then it's a third bad decision when you just say, forget about the break even. I'm going to keep my stop where it originally was. And if it gets hit, it gets hit. That is not the mindset that you want to have at all. You know, and that's 3 bad mistakes in a row, which usually is not going to lead to a profitable trade, as we saw right here on 11. So the biggest lesson that I took away from all of these trades today was take your profits when they're there. And this is a lesson that I've had to learn before. And I'm on August 15th, 2023, I'm learning it again. So, you know, I feel like I'm a good trader, but even then, you're still human. And sometimes you just go through the motions. And today is one of those days. But the good thing about it is that I understand my mistakes. And once you start to understand your mistakes, then you can start taking the steps towards improvement and becoming a better trader. So that's what I'm working on right now. So let's talk about trade 12. So after 11 got stopped out, on trade 12, we read the notes. This was just a bad revenge trade. Don't do this. Like this right here, I can't even give a real explanation as to why this was a logical trade. This was more so just me getting stopped out on this one and being mad that I got stopped out and saying, you know what, I'm going to short it right here at the top of the zone and let the downtrend continue. But you got to read what's going on in the market, because if we look at this level right here where the ellipse is, this represents a higher low. So when you get a higher low, that's telling you that there is demand in that market. So more than likely, you'll probably see prices come back, retest that level, and then you'll find support right there. And that's exactly what happened. So if we follow these wicks across, look at where we come into. Now, it's not the exact bottom for this entire swing, but it's only a few points away, where pretty much you had a false breakout past that higher low support level, and then we snapped right back up. So for prices to come back and retest that higher low, this was actually a downtrend reversal higher low that got established type of strategy, instead of a bear trend line continuation type of move. So reading the market is very important, and I just got really frustrated right here, and I acted out, and that's not something you can do. Frustration is a natural part of trading. Sometimes you're just not going to make the right decision, and that's okay. But what you don't want to do is go chasing behind the market trying to make up for what you just failed to do. What you want to do instead is just let whatever feelings you had, let those marinate. Don't act on them, but instead just wait for the next best opportunity. And once you get that opportunity, then you can take the trade that works for you, and you'll probably more than likely not only make up for the profits that you just lost, but you'll have extra profits on top of that that you can add to your P&L for that day. And then you can keep moving on and look for the next best trade after that. So always want to remember, you will be frustrated in the market from time to time, but you don't want to act on those frustrations. You just want to wait and be patient. And that's the biggest lesson I took away from trade 12. So then we come back up to 13. Now, once we broke out of the zone, created a higher low above it, I just simply went long and took prices back up to the next zone above. So one of my best trades of the day, kept it simple, read the market, took profits where I was supposed to. And then that brought us pretty much to our last trade of the day at 14. Now, if we read the notes right here, yeah, I did go long at the bottom of the zone, but the only thing is, if you want to buy the bottom of a zone, don't wait until the last minute. Because right here, I bought the zone on the first breakout. Usually that's the one that works the most. But there will be occasions where you have multiple tests of that level where you can take that same trade. So I could have went long right here on this red candle. That was the second opportunity. You could have went long right here on this touch of the zone. That was the third opportunity. And you could have went long right here on this touch of the zone. That was the fourth opportunity. But me, I tried to go long on the fifth touch of the zone. Now, I've seen scenarios where there have been like 5, 6, 7, 8, 9 touches at the zone, and you can take all of them. But more than likely, after you have 3 touches of a level and it fails to move away from it like you thought it would, anytime you try and trade that level after that, you're really just putting yourself in the way of everybody that's trying to push the market in the opposite direction, because you're not the only one seeing that these levels are not holding up. So more than likely, everybody that is long, they're either going to sell out and take profits, or they're going to sell out and take losses. But no matter what they are selling for, they still are selling. So that's going to add to the overall pressure that's pushing the market to the downside. And you don't want to get in front of that. So anytime you have a good idea, just make sure you execute in the early stages of it. Don't wait. Don't hesitate. Handle your business. So that was the last trade I took for the day. I had to call it after that because I just felt like I was out of rhythm with the market for the most part. But I would say overall today definitely wasn't my best performance, but I understand exactly what my mistakes were. And like I said earlier, that's the first step to improvement. And I don't think it's too much of a big improvement that I need to make. It's just a minor tweak that needs to happen. That one tweak is making sure that even though you have these great entries, you got to have great exits. It doesn't mean anything to have profits if you fail to lock them in. And that's pretty much the biggest lesson I was able to take away from the day. Lock your profits in when you have them, and don't get greedy, don't get complacent. It's okay to be confident, but be confident in moderation. Don't be overly confident and think everything that you do is going to work. That's just not how it is. The market is a tough thing to trade, and when you have opportunities that work for you, you want to lock those in. You don't want to play with the market too much because the market will hand you losses if you come around playing. So that's what I learned today, and I hope you guys learned something from this too. Hope you learned a lot, actually, because I know I certainly did. I'll be back tomorrow on August 16th, which should be a pretty good day because at 2 o'clock tomorrow, 2 p.m. Eastern Standard Time, we do have the Fed minutes coming out from the previous Fed meeting that happened not too long ago. So that'll definitely bring some volatility into the market between the 2 and the 4 o'clock hours. So I'll be here for that, and I'll tap back in with you guys tomorrow at 9:30 to 9:40 a.m., somewhere in between that time period. But until then, you guys, take it easy.